All right, welcome everybody. Glad you're here. This is Rick Sadler with Hit and Run Candlesticks, and today's date is Sunday, October 21, 2018. Again, thank you all for being here. Let's see if we can get ready for the week ahead. Maybe we find the hot stock, or maybe we find it's best to not trade at all, believe it or not. Okay, couple of things. Let me do a little house cleaning and catching you up on a few things before we start looking at some charts really quick. I want to announce that we've started testing live our new real-time alert scanner. And during the day, if you're in the chat room, you'll be able to see it work. Like I say, we're doing some testing. It's not ready to go out to the public yet. But I would imagine just another week or so, if that, for maybe anyone that would like to check it out on the early side. But so far, it's thumbs up. It's looking great, solid, stable, and it's working. So wanted to announce that. Something else I wanted to announce was as of tomorrow, we will have a live day trading room, totally separate of Hit and Run Candlesticks or right way options. That will be Top Gun day trading. For any day traders here that your focus is more on day trading, perhaps, I want to let you know that as of tomorrow, that will be available for anyone that's interested. Weekly events this week coming up. Hey, Doug, how are you? This week, speaking of Doug there, Tuesday night, Doug will be hosting, let me check here for sure. Yeah, Doug will be, that's Doug Campbell with Right Way Options, will be hosting public e-learning, public trading education right here in this room on Tuesday night, 8 p.m. Eastern. So I hope everyone can attend then. I'm going to throw a link out here for you real quick. One thing that I can say that both Doug and I, both myself with Hit and Run Candlesticks and Doug with Right Way Options, something we are working on very hard is our YouTube and putting some training out there, little short training videos. So you'll see a lot more videos come out for any kind of trading training. Boy, say that fast real 3 times. Some quick go-to videos. And of course, you can find the public e-learnings there as well. Tons and tons of information. So please feel free to, go to our YouTube channels. They are separate. So subscribing to one does not subscribe you to the other. Please keep that in mind. But if you do subscribe, you'll be alerted when there are new videos out there, new events, anything that we put on the YouTube. So please do us a favor, check us out on YouTube and click on that button to subscribe, that little bell down there, if you'll do that. You can also find us on Facebook and Twitter as well. If you're looking for my YouTube channel, somebody just PM me. It's just Rick Sadler YouTube, Rick Sadler at YouTube, something like that, and you'll get that. You'll get my YouTube channel. So, again, thank you everybody. Appreciate you putting up with that. Let's see, Flash new update. Flash. I opened up my TradeHawk just a little while ago, and I noticed it said there's a new update. Would you like to update? And I did. I've not looked at it yet, but yeah, the new bracket orders are in, so hey, that's pretty cool. I can't wait till tomorrow and check it out, and then we'll get Lex to give us a little bit of details and any insight that we might need on it. So okay, one thing I want to point out here for this coming up week, I did a quick check. I went to Zacks.com. They have a pretty good earnings calendar. I kind of like it. It's just Zacks, ZACKS.com. Earnings calendar, earnings /calendar, I think you put that in. They have a pretty nice earnings calendar, and it looks like there's about 740 companies reporting this week. So for me, that's kind of disappointing. Thanks, Ed. That's kind of a bummer because I try hard not to get too involved with earnings myself. Um, Earnings can burn you. There are times I will hold things through earnings, but generally speaking, I think earnings is a bad deal for most people. For most people, there are those that can trade earnings very well. If you're a day trader, earnings can be your best friend. It really can be. If you're a swing trader, sometimes not so much. But I want to point that out. So anything we look at tonight, I've got a list of a few longs, a few shorts. Um, Please, I have not sorted them through any kind of earnings. I feel that you have to do your own due diligence on that, whether or not you want to trade earnings. As we look at charts tonight, I think I can see for the most part when the earnings are. So we will. Yeah, I'll certainly mention that. The earnings are tomorrow or a week from now or next month. I'll certainly try to do that. It looks like, well, let me get rid of this right here. There we go. Looks like we're flirting around tonight, just about where we closed Friday. So not much change in the overall chart pattern. Okay, let's just get right into some charts here. So thank you for the past 7 minutes putting up with me, giving you some updates. I want to talk about the T line tonight, and a swing trading direction, and it's going to involve the T line, I guess. It's also going to involve a little. You'll hear me talk about the 3 EMA, the T line, the 8 exponential period moving average, and the 34 exponential period moving average, and we're going to kind of look at that a little bit with a lot of the charts because I think we can tie it all together just a little. So let's look at the market. And one of the charts I want to go to is a chart that I have, and I just call it my candleless dark chart. Literally it is. If you can't see it, but right above, there we are, right above this line right here, I have buttons I can click on, and it just goes to different types of charts, and I call it my candleless dark chart. And this is what it looks like. Obviously, no candles, candleless. And what I want to look at is the direction of the market without any kind of candle or price action swaying me. So first, let me look at this, and then I'll show you what I mean about maybe a candle swaying me in one way or another. What we have is the red. Let me get my. There we go. This red line right there, that's the 3 EMA right here. And the white line, that's the T line, that's the 8 exponential moving average right there. The blue line, that's the 34 EMA right there. And this red line, this is just the 200 simple. I'm going to keep it up right now because there's an awful lot of stocks around that 200-day simple. Market is around the 200-day simple, so I'm going to keep that up for tonight. This is just the regression line of the T line is all it is. So what I want to point out here is, we talked about this last week, and that I sorry to keep beating this bush, but the 80-20 rule, and I think it's so important. 80% of the stocks are going to go the direction that the market is going. 20% will buck the market. And so what you've got to ask yourself, are you like, do you fall in that category of, are you an 80% trader, or can you actually, put money in your pocket trading against the market, part of that 20%? So You just, every trader is a little different, and every trader has to decide what they want to do. And thanks, Happy. By the way, I want everyone to know I welcome questions. So truly welcome questions. So anything here. So Happy is asking, how do you decide about market direction when you have more than one moving average on the chart? Happy, thank you. That's a wonderful question. Basically, I'm looking at moving average confirmation and crossover. So for instance, you could pick any moving average you want out of the sky. Pick one, it doesn't matter. And you can either put a faster one with it or a slower one with it. And when you do that, you start putting in a trend. For instance, I can look at this, and if I can, let me make this a little bigger here. Move this over. There we go. If I can say to myself, looking at a chart, that the 3 exponential moving average is trading below the 8. So a fast compared to a slow. These two, just looking at these two, fast compared to a slow. If the faster is under the 8, I don't know. I'm pretty simple-minded. I really am. But it works. That right there tells me that based on the 8-period moving average, we are in a downtrend. Based on the 8-period moving average, we are in a downtrend. You can do the same thing using, say, the 34 exponential moving average, the blue line, and the T line. Or T line's the 8 exponential moving average. If the faster moving average is trading below the slower moving average, then you have a downtrend. Now, each trader is a little bit different as far as what is your timeline, not time frame. Time frame would be 5 minutes, 60-minute, daily, 2-day. Timeline would be how are you looking out? And these moving averages work fantastic for me personally. I know people that use the 3, the 8, and the 17. In fact, I've got some charts with the 17 on it. I know people that simply use the 20 and 50, and that would be perfectly fine. Whatever you use, though, the important thing is it matches your trading style. So that's how I decide about market direction using the moving averages. Now, I had mentioned, let's look at this without candlesticks on there or without price action. And in my mind, we are clearly in a downtrend. There's no ifs, ands, or buts about it. We're clearly in a downtrend in my mind. Now, that is not the same as we are hopelessly bearish. That's not the same as the sky is falling. That's not what I'm saying. We are just in a bearish move right now, and the moving averages are showing it. That's all I'm looking at. So let's put a candlestick on here. And I know a lot of times that this will sway traders. You know, you have this downtrend, and all of a sudden you have, whoops, how come it's not showing up? Huh. What's going on here? Try this color. Huh. Well, we can do this differently. Well, you know, I can see it there. Let me see if I can. It's just not showing up on that black background. Darn it. Yeah, it's not showing up on that black background. Okay, what I'm going to do is run over to the T-line chart right here. So it's basically the same chart, but it does have candlesticks on there. So let me put up a candle that might influence us a little bit. So if we see a candle like this tomorrow, that just might influence some traders, might influence me, you know, who knows? The thing of it is that's really trying to nose pick a bottom is what it's trying to do. Because our trend hasn't changed. Now, I'm a big one for saying the trend needs to be intact. or some trend needs to be intact. I'm not one for trying to catch a bottom. And a trend that I could be happy with is even that the green line on this chart is the exponential or the 3 exponential, and the black is the T line. If those moving averages cross, then I could be a little more, yes, Ed, please, thank you. Then, wait a minute here, Ed, no, actually, no, Ed, no, sorry, no. So when we see that 3 cross the 8, then we have a trend change based on the 3 and the 8, which means price will be up here. Now, for some folks, you think you've missed the boat. That boat has sailed into the sunset. It's gone. You're stuck on the island. You're never, ever going to make any money. And I think just the opposite. I think that should put confidence on your plate. That should put confidence that the bulls are working. So that 3, I'm going to make this red so you can see it, but it's the 3. See, by then the 3 would be up, and then what we're looking for is a pullback in price to test that area. So that's kind of what the chart pattern might look like. I'm not at all saying that's what's going to happen tomorrow. I mean, seriously not. I'm just trying to show what a candle that might sway us one way or another. So I think trading with that trend is truly the best way to go. Not everyone does it, but I truly think it is the best way to go. Therefore, based on the chart we're looking at right at this moment, we would have to look at this and say, well, the SPY is in a downtrend. The diamonds are in a downtrend. The Qs, there we go. The Qs are in a downtrend. See how the faster moving average is below the slower moving average. So anyway, that's I think this is one thing that could really help swing traders is first being very clear about your trend, very clear about your trend, and how do you determine a trend, and how you personally might determine a trend, and how I might determine a trend are very, very different. But we are both extremely correct if it's designed to match our trading. That's important, okay? Very important. All right, I've got a couple of questions here I want to go back and answer. Let's see, Bill, can you give us a breakdown of the T-line regression line? If I have time tonight, I will, Bill. We'll see how tonight goes, okay? Prav, is this? Yes, this is TC 2000. Yes, it is. Mike is asking why the 17. It's a 17 exponential moving average. An honest answer would be, heck, you could pick the 20 if you want. I just like that 17. I like the 20 as well. But when you come to these webinars and you hear me talk and you hear, and if you go to any webinars, if you want to know how to make the best of webinars like this, or any webinar on stock trading, any education on stock trading, if you want to truly make the best of it, what you do is you don't chase what one person says. So I say the 17, it doesn't mean that that's what everything should be changed to. Because then what will happen is the next webinar that you go to, somebody will say, well, I like the 21.5 moving average. And you know what you happen? You'll change that 21.5 moving average. And you end up just chasing things around. The truly, truly successful traders, what they've done is they have gone through everything under the sun. They have put everything in a jar. They have shaken it up. And then what they do is they pull out what makes sense to them. They pull out what works with their trading. Example is, if you hold stocks for 6 months, honestly, the 8 exponential moving average is worthless to you. Absolutely worthless. The 20 simple might be worthless to you if you hold stocks for 6 months. So it's so important. This is going to be hard for me to draw probably. But think of your trading. You're trading like a gear. Your whole trading mechanism is like a gear. We'll go one more. That's not bad. All right. And one gear is worthless without another gear. So you have another gear. Let's see here. How can I do this? You have another gear that meshes, and we're going to cheat over here. You have another gear that meshes with another gear. Now you have a set of gears. And your trading has got to mesh like that. One gear by itself doesn't work. Put 2 together, you've got something. Put 3 together, you have more. Put 4 together, and you have more. So one person that says, that looks at a chart and says it's a buy, to another person, they may say you're out of your mind. Well, you both can be right. See, the unknown is what is our design, our trading design for each person. So if if somebody is set out to say, hey, I want to trade like that person, you're going to have to do a deep dive into what that person is thinking. You're going to have to do a deep dive into their trading style and learn that first before you just go out and say, well, that's a buy. An example might be Lulu. See, to me, Lulu is a short. To somebody else, you're sitting there licking your chops waiting for a buy. Or somebody else might say, well, you totally missed that short up here. Different strokes for different folks. So but if you know what that trading style is that you have, then so much more of trading will make sense. I hope I didn't get too way out there on that. I hope that helps. Let's see, JP, please explain the moving averages are lagging indicators, right? We will not miss the move up or down based on a timeline. No, they're just trying, all the moving averages is doing is telling me what the overall market is doing without any anything sidetracking me. Without, if you had price in here, well, it's not what I wanted. Price could sidetrack you. Price could be one of those. There, hey, look at that. I did it. I just thought I'd try white. If we had a bullish engulf in here, that just might sidetrack you. Now, I'm big enough to admit it. I'm big enough. I've been doing this long enough. I've been sidetracked before. I'm not a machine. I wish I was. I'm not a machine when it comes to trading, and I get sidetracked. That new shiny thing out there? Well, if we get thrown a bullish engulf, that's going to be a pretty big shiny thing. We might have that, God, I better get long right now. But see, my trading style is telling me that I'm not sure I want to be long till I get above that yellow line right there. My trading style says, you know what? I want to wait for confirmation. I want to wait for a test, and then we might have something to trade. See, that's my trading style. And Mike, I'll pick on Mike while you're here, Mike. You might be the trader that says, hell, I got a bullish engulf. I'm getting on that bad boy. I'm going to ride that thing. And it may or may not work out. No one's saying it's not going to work out. It's just, what type of trader are you? So that is something so important to decide before you go great guns a trading. Make sure you have that. oh, I'll call it a plan, but I don't mean this. I don't mean a trade plan. I don't even mean a money management plan. But know what it is you're looking for. That otherwise you'll just be wandering, wandering after this moving average, or after some chart pattern. You'll just wander from one to another without without there we go. Inverted head and shoulders. Without that direction, you'll just wander around. So very important to get that down pat. Let's see. It seems. See, we did that. Thanks, JP. Thanks, Mike. Appreciate it. Kim is asking, how do I know? Just getting into this. Um, you know, you'll know, Kim. You'll know. First of all, when you start trading, you trade with a little bit of money. I tell people this in our trading room all the time, that's starting out or even struggling, and it's stop trying to make money. I mean it. Stop trying to make money. Don't trade to make money when you're just starting. Trade to learn. Trade to learn. Yep, it's going to cost you money. It will. It's the price of education. Education costs. It's not cheap. And maybe your education is books and webinars and courses and classes and stuff like that, or maybe your education is actually spending some money, very tiny bits of money, for your education. That would be the education of bruised knees and elbows, is what that would be, or it's a combination of all the above. But you will know. When you can put a string of 3 or 4 or 5 trades together, and if you can put 5 trades together, 3 are winners and 2 are losers, and you can do that time after time after time, this week, next week, following week maybe, you're getting there. And well, that's when you know. That's when you'll know, when you can start doing that. So when you can control your losses, when you utter the words, when you can control your losses and you utter the words, darn, I should have let that stock run further higher with it before selling it. I could have made 40% instead of 20%. When you utter those words and you can control your losses, you just might know you're doing the right thing, and it just might be time. So anyway, that's one thing there. So let's look at some charts. We can talk a lot more about this as we look at charts. And let's see, we'll keep this up. Let's put this up here. We might bounce back and forth between this chart and that other chart I just showed you. We'll look at them both. So I've got Lulu up here, and I think Lulu is a short right now. We have the faster moving average trending below the slower moving average. We have a high, and so far we have nothing more than a failed high. We also have a bearish H pattern. Let me point that out to you. A bearish H pattern, and this would be a bearish H pattern right there. So we start to see failure in this area, down we go. A good place to have a target that I like would be approximately or in the direction of the 200-day simple moving average. Maybe I should just use this chart here. This is probably going to fit the shorts best. So we have the H pattern. This is the 50-day simple right here. We have a blue ice failure. So what I'm going to do is come in here and start by laying a couple of target lines in here. And then from there, what I can do is maybe detail out price action. So that's a direction that I want it to go. I better put something right there as well, because we've got a couple of touches. So there's there's what I think three, let's add the fourth, very good target for Lulu. And, you know, somebody might ask, well, how do you know what to do when you get to that target? That's where we watch price action. What kind of candlestick is it going to give us there? An example is, here's the 50-day simple. 50-day simple is a very popular, very noteworthy, very important moving average. Just 1 second there. Let me kind of detour just a slight bit. Please don't think of that 50-day simple moving average as that exact moving average, okay? If I let's see here. I could do this. See how fat I made it? If I could make it 3 times fatter, I would. If I can make it 3 times fatter, I would. Believe me, it's not about the to the penny on the 50. It's about that area, okay? About that area. So, you know, don't use any moving average to its penny. Don't ever do that. I don't think that's a good idea. So when you get down to these levels, these are levels where the bulls and the bears, they've had an argument before, and they're very likely to have some sort of an argument at the same place. And each one of these places, argument, there's always an argument at the 50, in my opinion. And so we're going to watch for price. So looking at this, we can clearly say this has been in a downtrend. And at that 50, what did that candle tell us? It told us that the 50 meant nothing. See how price came back up? And look how we just bounced up against it. What is price telling us? It's telling us that 50, the 50 simple, is holding us down. So nothing about these candles are saying a bullish scenario. Well, the same thing would be true at each one of those levels. Watch what price action does at these important levels. Here's a long chart right here. This is actually a rounded bottom breakout, an RBB setup. And again, I better go check Lulu. In case I forget, look, make sure you check your earnings. We don't have to worry about earnings until December on Lulu. KGC has earnings, in less than a month, 3 weeks, I guess, something like that. A little less than a month. So just you're going to have to mind your earnings. It's not my job to mind the earnings for you. So please make sure you're checking earnings. It's so important because that can burn you bad. So here we have a pretty decent little bottom forming, and we've got a nice pop, nice little bullish engulf right here, nice pop, little consolidation, and now we have kind of a morning star signal. That's in my morning star book right there. That those 3 bars, that would be a morning star to me, and we've closed over that 50-day simple. So here's a chart that I would consider. I might look at, put it on my watch list, and trade this over $2.89, basically over that 50-day simple moving average. Make sure you know where your resistance is. Make sure you know where your stop would be, or your support. Stop on this to me would be around that 280 mark. Before, you know, think of a chart when it moves up. Think of it, it has to move up in stages. It can't just move up. We may want it to go near this price. We may want it to go there, but until it gets through that section, and then it has to get through, and I'm just going to draw a line using this dotted deuce right here. It's going to have to get through that section, and then it's going to have to get through that section before it can get up here. So we may want it to go up here. We may dream of it going up there, but we're going to have to manage and monitor this chart as it moves up. So make sure we keep that in mind. Yeah, I can put the vol stop on. Yeah, I can do that. I'm going to dim it down a little bit, or I'll be stir crazy before the end of the night. There we go. You can put the vol stop on your charts too, Mike. I hope you know that. So another chart I'm looking at is OR, another gold stock, and you can see how this has put in a pretty decent bottom right here. In fact, let's just draw a line like this right here, cover that in. You can see that it broke out over the 50. It's pulling back and testing, and there's Mike. Mike asked for the vol stop, so there's Mike's vol stop right there. Everybody should be able to see the dots right there. This is watch list material. This is not buy material. It's not buy material because we don't have a buy signal. It's a chart that I would put on my watch list. And what I want to wait for is now I'm going to make stuff up because I can't predict the future. One thing I'm going to do is I'm going to draw a line down like that, pointing those highs out, and then I'm going to wait for a bullish breakout. Maybe it happens in one candle, maybe it happens in three, but it would be above this level that I would look at. And actually, I think it would, let's change that color. I would have to consider it only above that level right there. So the trade I would be looking for is the signal that says heads up, and then I would look for a buy here, or a buy on a pullback, or a buy on the rally back up. So the buy on the breakout, the buy on the pullback, or the buy up. And the reason I'm not concerned about that high is part of the chart pattern itself. The chart pattern I'm looking at is this right here. Low to a high, to a higher low, if this is going to be the low. And then if it starts moving, that's what I want. That's my risk, I guess. In all trading, there's going to be risk, and I'm willing to take that risk. My stop will be in here, so I know what my risk to the downside is. If it did get up into here and test that, well, simply move that stop up and tighten your risk up. So let's see, JP. If I understand your way of trading, you look at moving average, determine the trend, and then look at price action, what the candlesticks are telling you. In a very basic way, yes. I guess you could say that. Yeah, in a very basic way. In a very basic way, but yes. Let's see, can you briefly explain the vol stop? The vol stop is just average true volume. I'm not going to get in too much detail because we're already running late tonight, and I'm only going to be here an hour, and we're cutting into that. The vol stop is its average true range. If you use TC2000, which I highly recommend everyone use, as far as I'm concerned, everyone in the world should use TC2000. You can't beat their charts, and it's about the cheapest thing out there. It really is, cost-wise. It's about the classiest program I've ever seen. It's cool. I love it. So everybody should use TC2000. I get nothing for that, by the way. The volatility stop, there's the settings that I think we all use, 10/1.5, and it's just showing it average true range. Great for giving you those signals that it's in buy territory. They're not buy signals. They're not reasons to buy. They're a condition. It's just one of the several conditions you might look at on a chart to make a reason. So let's see. And yeah, I think there is. Doug's here. I think Doug might have the link to it. But there is a discount you can get for TC2000. Here is Angie. I think Angie is set up as a short. Since we've talked about since we talked about the V-stop, let's talk about it here as well. We talked about it on the bullish side. This would be the bearish side. We're underneath the V-stop. We're not going to talk about these too much tonight, just lack of time. We just can't talk about everything in 1 hour. But these lines right here, those three lines, that green, red, blue, those are regression lines of the T line. I'll just kind of leave it at that for now. They're pointing down, plus price is underneath them, plus we're under the 50-day simple moving average. This is a bear flag that's setting up here. So we start to see follow through, and you realize that it doesn't matter what direction any chart is moving. It doesn't matter what current candlestick you have. Everything is based on follow through. Once we get that kind of stomped into our mind, then I think we're one up on the system, realizing that everything is based on follow through. And that's where price action comes in. So we start to see weakness, follow through. I'm looking at these areas down here as my target areas. This can certainly be bought, as far as I'm concerned. This Angie can be bought, excuse me, pretty much anywhere. I'll say in that area right there. All the way up into here, Angie can be bought. Anywhere down here, and of course weakness, Angie could be bought. I think that's a good looking short right now. Excuse me, let me grab a little drink of water here. Sorry about that. JP, you can look at the website. The costs are on the website. At the top of my head, I don't know, $75 a month, maybe. I like to say I'd have to go look to be 100% sure the exact price. All right, let's go to this next one. Look at SQ. See how SQ is setting up? One thing I want to point out is let's look at this chart right here, our naked chart. You see how we have a top and we have a failed top, and down we go, and then we have this rise and we're starting to roll over here. This is a bearish H pattern. This is one of the chart patterns I think should be at the top of everyone's trading list. This is chart patterns to me should be like, I don't know, peanut butter and jelly. You can't have one without the other. Cookies and milk. It just a cheese pizza. They just go together, and I think chart patterns are so important. And there's only a small handful of chart patterns that we have to recognize, and this bearish H pattern is one of them. It is the exact opposite of the J hook pattern. So know the alphabet: H and J, J and H. So we start seeing this. We start seeing that weakness. And then what we're looking for is come back down here and test this area, this candle's low, or this area, and then follow through down to the 200-day simple, or about that 200 simple. So I think SQ is still a short setup here. So was there a question here? Warren, I'm not going to get too much into the regression lines tonight because of lack of time, okay? I can tell you if you can write, if you have TC2000, it's easy to do. You set up T-line high, T-line low, and then you put regression lines on them, and then wipe out the T-lines, make them so you can't see them, make them invisible. On another night, I think if you go to my YouTube channel, there is a YouTube there that I do talk about the regression lines, and that would be where you could start and get some good information. Let's see, another short is Roku. Now I know there were several people in our trading room that got short Roku. I know some folks that closed Roku, and some folks still have Roku. If you ever close for a profit, man, I think thumbs up. You're my hero. Good job. Good job. So those that are still holding it, right here, there's a nice little top right in here, right there. And that comes close to the dotted red line right in there. So, that makes sense to me. Another place that makes sense to me is always the 200. And I do put a lot of weight into this area, the whole 200, when price gets close to it. Uh, Say price is up here, I never even think about those two lines down there, not ever. I see price get under that 50, now I start thinking about those. So, and it's just common for price to run back and forth to major moving averages. The areas, okay? Don't get hung up on what is it here? Don't get hung up that the 50 is at 64.59, or don't get hung up that the 200 is at 46.26. Don't get hung up on those pennies. It's all about these areas. It's not about the exact price. Here's another short. Believe it or not, there are some longs in here. We'll get there, I guess. Here's Twillo. Twillo, been in trend. We're under the 50. We've got that bearish H pattern. We're underneath the regression, the T-line regression lines. We've got a red vol stop up here. I see no support at this point, and I still see follow through to the downside. Now, keep in mind that, of course, if you wake up in the morning and the market is just ripping up, well, then you realize that some of these shorts might not work out so well. On the other side, if you see us gapping down big time, be careful not to chase anything. So be very careful with that. Don't chase anything. For those that are having difficulties trading right now, this is a very difficult time. So don't beat yourself up. If you're going to beat yourself up, simply beat yourself up about trading when you shouldn't be trading. That's all. Just take a break sometimes. Just simply take a break and maybe take a couple of days off. So maybe that's a little helpful to you. Thanks, TC. Appreciate it. Hey, we have a long here, finally. Now, we have a long, and this is a rounded bottom breakout. Now, let me explain something, and this kind of goes back to what I was first talking about. Make sure your gears are meshing with you. Don't try to make your gears mesh with something you hear somebody say. For example, I think this is a bullish chart. Nowhere in there did I say it's a buy. Sometimes when people hear someone say, this is a bullish chart, you run out and buy it. And then what happens is, the next day it gets punished and you think I'm a scumbag. Well, I'm not the scumbag. You simply are not paying attention to your trading. That's what that boils down to. So I love this chart. I don't love it as a buy because it's up 1, 2, 3, 4, 5 days. It's at a spot that I feel deserves some profit taking. So let it profit take. Put it on the watch list. Let the profit be taken. That's fine. When it pulls down or gets closer to support and you start to see a buy signal, then you can get back in it. And if you want to see exactly what I'm talking about, just look at the history of this chart. Look what it's done. We have gone from here. You want to buy. You do not want to buy as it starts moving up here. And look what happens. You want to buy. This one didn't go very far, okay? So maybe you bought and maybe you got stopped out. Maybe you didn't here. But you see what I mean? See how, back that up. That might be a reason to buy right there. It broke out might be the reason to buy. It pulled back and made another buy signal. So low to a high to a higher low, higher high, higher low, high, low, and we're at a high. So wait for the pullback, wait for the lows to come in, and then look for that buy signal. What's going on here? There we go. CF. CF is another short trade I would put on my watch list. And short, you can see that CF here had a horrible, horrible day back here. And we broke through that 50-day simple moving average. And then we popped right back up. We got right into the T-line regression lines. And the volatility stop also was red right here. Now, the volatility stop wasn't showing up over here, not when that candle was being made. But there was a volatility stop there. And then you see how it just came right back down and it's just bouncing here. This is a bearish chart pattern. And being short this on weakness could set up for all the way down into this area. Now, a few areas that we want to take in consideration is this is an obvious place to watch price action. It might cause price to shift or change, something you might not want. This is another area that we have to watch right in here. We have to watch that. Price might get here and start bouncing, make you nervous. Be comfortable with price action. Be comfortable with your plan. You know, if you short this, you put your stop. You know, put your stop up here. All the bullishness in the world here, in my opinion, shouldn't change a thing. Trust your plan. Trust your plan. Let's hear. Thanks, Rick. Thank you, JP. Appreciate it. Glad you were here. FLS is another short setup. FLS. You know, I love this type of short pattern, and you'll see that I'll look at them time after time after time, where you have an uptrend, very nice uptrend. We start to fail. We break down and test. And what are we looking for? We're looking for the money this way. We're looking for that move right there. That's what I'm looking for. Somebody else might look for this move. Get in up here. There's nothing wrong with that. That's just a way to look at a chart, something different. I like to see this move. I like to see a high, a low. Give me that failed high on a short, and then I get interested in it. Okay, I'm tired of looking at shorts. I got to tell you that. Here is HIIQ. Another one that looks like it might want to revisit the 200-day simple moving average. One reason I like these type of shorts, and I like the opposite in longs, the opposite would be a rounded bottom breakout, is that when price, in shorting, when you're looking at a short chart, when price starts to fail, and if it gives up that 50-day simple moving average, and assuming the 50 is above the 200, there is a very high probability, and I have to put the word if in there. There's a very, it's like saying, I maybe guarantee. I'm almost for sure. You know, that's kind of what you're saying. It sounds kind of kooky. But there's a high probability that we head down here, providing if there is follow through. So follow through, let me change that word to weakness. So if there's weakness, so where is weakness? Maybe instead of looking for weakness, where would you say the bulls take control? And, you know, and it's your best, it would be your best, it would be based on what you see in the chart. So answer that question, answer that riddle, and anything below that would be weakness. So to me, I see support right through here. Let me draw a big line right in there. I'm sorry, resistance. I should have said resistance. I see resistance right here. Okay? So, what is weakness? Anything below resistance. That's weakness. Weakness doesn't have to be below these candles. It doesn't have to be. Weakness can be right here. The chart pattern is there. The chart pattern is set up. Everything is whispering to you what it's doing. And as long as price doesn't start moving up into this area, then weakness is still there. Now, let's not get carried away here. Let's think about this. So we have a morning star signal, we have an evening star signal. No question, this chart's in trouble right now. As of the close Friday, this chart is in trouble. So I see a morning star. That said we got higher, okay, but we did not break through resistance. We had an evening star, so that says we're going lower. So we're in this chop zone right in here. So say tomorrow there is a engulf on this chart, and say tomorrow the market is also working. Well, if the market as a whole is starting to work, if the market is breaking resistance lines, and you have a bullish engulf in here, I mean, come on. Are you going to stay short this? Is that weakness? But wait, Rick said we're below that red line. You have to put it all together. You have to connect the dots. It's not all about one little thing. It's about several little things. It's about conditions. Find, understand, and learn the conditions you need to learn, and then that gives you the reason to push the button. So it's about conditions. Let's see, Val is asking, futures are down, so maybe Monday will be a down day. Maybe. I can't predict what Monday's going to be, Val. And what the futures are at this moment might not be what they are come sunup. So if it stays this way, it's highly possible, yeah. I mean, if you look at the SPY here, we could come down and test those lows real easy. That could be quite dreadful for the market, or it could be a test of the low and the bulls just take this and run it higher. So here's VIRT. Try that again. VIRT. This is another rounded bottom breakout, and nice little sideways rectangle consolidation right here. I would say anything about this 2290 area, maybe even 23, over 23 is what I would be looking for a trade. The trend will have changed, I think, in a good way. I mean, you can see that we've already broken that downtrend up. We've got that good basing right here, but we also have these resistance levels right in there. So I think if we get through those up tests, so here I'll do that, and then for those traders that want to buy in a hurry, you can buy there, you can buy down, you can buy here. The closer we get to the right, the more personal it becomes for each trader on how you trade the trade. As far as I'm concerned, trading is not about right here. Trading is about what you see all this doing, and what can the trade do for you. That's what the trade is, not about what it's doing minute by minute right here. HIIQ. Would you consider shorting at resistance? Yes, I would, SP. Absolutely. Here's FPRX, little biotech, if anyone's interested in biotech. That's been in a downtrend, and it looks like that downtrend is trying to change. We have a little bottom down here, nice little double bottom. Breakout over the 50-day simple, and now we're a little sideways action going on. You do have some resistance in here coming up to about this 1610, 1615 area. So you want to be pretty careful with that. That is 14% away, if depending where you buy it here. So one for the watch list. FN, let me get rid of all that. There we go. FN might be one that's ready to come back down. We've got this high, a failed high here, and right now we have a failed high setting up. So I think the important thing here is to realize what the what the trend is actually doing, and the trend is down. So what we want to do for a short is basically follow that trend to the downside. I think the volatility stop right here, I think it would be kind of important maybe to get through this area. Make that red. There we go. Get through that area right there, and then that might be the short below that area right in there. I'm going to try to speed this up just a tad. Apple. I am personally short Apple. And I'm short Apple because of the chart pattern it's set up here. Let's see, I can get rid of that. To me, it looks like we have a little top here. And I'm just, trading from the chart. I don't trade from, what everyone thinks the chart should be doing or the company. I simply trade from the chart. And I look at Apple being sideways, bearish top. We're under the 50, the volatility stop. I see weakness. So where would the weakness start to dissipate? Well, I would have to say if we could break out of about this 223 area, that might bring on some buyers. So above that 223 level is where I would probably be nervous and wouldn't be too excited about that short that I was in. If the short works out, targets to the downside I'm looking at are here. I'm going to have to go here just because I do. And then, that right there fills that gap. And, that could be pretty good. So my risk right now is, here's another way that I look at things too. Here's my risk. It's my risk. Here's my reward. Man, that's a lot. And I'm willing to risk that. Can you share a link for your chart setup based on TC2000? I wouldn't know how to do that, Caesar. I wouldn't begin to know how to do that. Fun, F-U-N. Fun is setting up for an RBB pop, it looks like to me. We've got a pretty reasonable bottom formed in here. Higher lows seems to be working. One thing I like is the fact we broke out and then that nice sideways consolidation. So from here, I would be looking for that breakout, maybe a test. Come up here and touch that area, maybe some testing, and then follow through on up to the 200 up here. Nah, it's not silly. Will the RBB still work to the upside with all the downside pressure? Anthony, you must not have been here in the very beginning when I talked about market direction and the 80-20 rule, okay? This trumps anything and everything. This should answer your question. If the market, the direction of the SPY will bring 80% of the trades. 20% will go against what the SPY is doing. So are there some RBBs that will go against the direction of the SPY? Of course there are. Are there some breakouts that will go against immediately? Of course. So again, it's the 80-20 rule. 80% of stocks will follow what the SPY is doing. Here's GoGo. GoGo, there's quite a few people, I think, still long on GoGo. This was one of our trade ideas and beautiful RBB setup, pulling back right to the volatility stop. Nice little doji Friday on positive trading. That might be a trade that jumps right up. This could be one of those 20%ers maybe. So here's another short COP. COP, we've got, I don't know why I didn't have that all cleaned off. COP has a clear topping pattern, very nasty day to the downside, pretty good volume. We've really done nothing but gone sideways ever since this last day was put in. Any weakness, or shall I say, Any weakness below 74.40, this is a setup for the short side. Targets to the downside, I'm always going to start with these two lines right here. And from there, I will come over and simply get a little more detailed, maybe with price. Heck, I'm going to go all the way down there, down to those lows. So that's what I would be looking around for targets. No, Keith, we will not have a booth there. AEM, another gold chart. Nice little trend right here. Broke out. And then I think if we take this and do this right here, that shows support. That's what we need to get out of. That's where we need to go to make money. We might look for entries in this level. Somebody might even enter in here or that breakout. This should be a chart for the watch list. So far, we've got that bottom in. Looks like it's trying to turn. So any entry in here, you just want to make sure your stop is in there. We don't want this to go down. Let's see, Happy, do you only short when price below the 50? Let me go to Apple just because I knew it was up. So let me ask you this. Are you asking, do I ever short up here? Is that what you're asking? I want to make sure I understand this. Almost never. Almost never. And the reason is I can't pick tops. I can't pick bottoms. In fact, I know of very few people that actually can. I'm not a fast trader. I'm not a day trader. I'm not a trader that is going to guess up here because that's all it's doing is guessing. I want to see the trend in place. I want to see trading 101. If you're bullish, you want a low, high, higher low, higher high. That's your bottom to start trading right here. For shorting, you want a high, a low, a high, and a lower low. That line right there is where you start shorting. Anything in here, you're really just kind of guessing. You're hoping. You're a hope trader. And more times than not, it doesn't make you tons of money. I wouldn't say this makes you tons of money either, but your probabilities are much greater. Exactly. I wait for that second leg or that third wave, if you will. And I'm not a wave follower, but you've got wave 1, wave 2. I think money is in wave 3. And then you have a slight little pullback for wave 4. And then I think money is in wave 5. So these, to me, are your money waves. And I have no problem buying into wave 4. And the reason I don't go after this is because this is what's starting us off. I can't guess that that's what that's going to do. All I know is a stock in a trend will stay in a trend till it's no longer in that trend. And once you start a low, high, higher, low, higher, high, you now have a trend, as small as it may be, as shallow as it may be, but you do have a trend. So, like say, wave 3 and 4, your money wave, 1, 2, 3, 4, 5, excuse me, I was saying 4. Wave 3 and wave 5 are your money waves, and I have no problem buying on wave 4 sometimes. Let's see, GG. GG, another gold stock setting up for that RBB. And here, if you look at this, what we've done here, see this high right here to me is probably the most important. And we are just about ready to take that out. And it looks like we have a pretty decent chart pattern here, that low to a high. And so far, we're holding those lows. So if the bulls take hold and we start to break out, that might be your trade right there. Uh, any kind of a pullback or slight move up, and then targets would be up into this area here. The last one I have for today is this AMD. There's another one that I know that quite a few people, members of Hit and Run Candlesticks, are in short. And this is another one that's, we've got that H pattern that actually has followed through. Here's your H, and it's followed through because it's below this low right here. So we've actually followed through. If this popped up a little bit, that might give a nice entry. You know, if you feel like, you know, you want to early in the morning, if it's in that area, if you want to short that, that makes sense to me. I'm still looking for targets down into these areas right in here. You know, you want to look at that right there. See the battle that went on right there. You want to look at the battle that went on right in here. And that's where price is likely to go. Of course, if the bulls took hold of this, where would we not want to be short? Well, based on this chart pattern right now, honestly, I'd say about this area here. So anything up to this area would be a short. Let me show you a chart that I am short that has, and I'm not green on it, but look at Costco. It's come back up. It got kind of bullish in here, but my line in the sand, doesn't matter where I bought it, my line in the sand is up in this area because that's where resistance is. So my plan is simply follow the trend. Well, what did price do? Well, price came right back into trend. Now let's see what it does here. I mean, if it starts to fail, great for me. I mean, life is good, right? Of course, if we have some great big breakout, life might not be so good. Welcome to trading. So we'll see what happens here. SP's asking, do you avoid trading stocks during their earning week? Not so much about their week. I can be in a stock right up. Say earnings is Tuesday, for example, on ABC. I don't mind being in it on Monday, but I try to my best to avoid being in it on earnings. That I do. Earnings to me is a crapshoot. It is. You talking about rolling the dice? It is literally rolling the dice. And actually, I think the odds aren't 50-50. They aren't. It's just like being at Vegas and you play on the roulette table. You know, the odds are in the house's favor. You know, you land on those double zeros, you lose everything. So, I mean, if you feel like rolling the dice and you think that earnings are going to be good, go for it. I shouldn't say earnings are good because there's a lot of times earnings are good, but the stock tanks or goes the opposite of what you think it should do. So, I think your odds of beating earnings is less. I think your odds are greater. Earnings are gonna hurt you than they are going to help you personally. Now, for a day trader, again, that's very different. Day trading is quite a bit different. You can day trade earnings, and man, you can knock the ball out of the park. You can do a good job. Thanks. Let's see, John. Nice, honest, believable, informative, experienced, presentation. Thanks. Involved with Sosnoff is great. Yeah, Sosnoff is great. Absolutely, he really is. Nice man too. He does a great job. So way to go, John. All right, folks, I'm going to jet out of here. Only 15 minutes late, so I think I did okay time-wise. You guys have a wonderful, wonderful evening, and I will hopefully see each and every one of you tomorrow. You guys take care. Be safe. Eat something sweet tonight before you go to bed. Night.